getting ready to buy your first home and you're thinking, what is a mortgage? How much is mine going to cost? And how in the world do I even get one? I'm going to answer all of that and more in this video for you. So stay tuned. This is Mortgage 101. Hey everybody, welcome back to my channel. If you've been here before and if you haven't, uh, welcome for the first time. And I appreciate you coming on here to view what I got in store for you today because it is great info that I believe is pertinent to any buyer in any stage of real estate, whether their first time or their 10th time. So, what we're going to be talking about today is mortgage basics. This is called Mortgage 101. I'm talking to you about interest rates, talking about the types of mortgages, and how to get pre-approved and how your credit score affects that. All the things that are very good to know if you're thinking about purchasing a home right now or at some point in the future, whether it be 6 months, 12 months, 3 years, 10 years, it's all going to be relevant to you. And if you haven't already, I'd really appreciate if you'd drop a like on this video if you enjoy it, if you find value in it, and subscribe and also ring that notification bell. Just because when you do that, it helps me get this video to more people, keep them informed about what the housing market looks like, whether that's the national market, also this local market here in Birmingham, and as well as the surrounding suburbs, and also this information is just very educational in general, no matter what market you're in, especially the mortgage info I'm going to bring you today. So, and if you missed my last local market update, it was the Alabaster update, and that was from a couple days ago. I'll leave the video right here. Excuse me, right here. And so, without further ado, let's get straight into it. So, part one of this is going to be what is a mortgage and what are the main types, and then we'll break that down even further into the subcategories. So, a mortgage is the loan that you use to buy a home. It has a special name because it's probably the biggest loan you'll ever purchase, unless you just get like a super yacht or something crazy like that. But for most people, the mortgage is the biggest loan that they ever make or they ever take. So there's two main types. The first one is a fixed rate mortgage, which keeps the same interest rate throughout the life of the loan. So let's say if you get a 15-year mortgage and you have a rate at the start, that rate stays the exact same number until the end of the loan, unless you refinance at some point in those 15 years, or it could even be 30 years. Whatever the length of your loan is, that rate stays the exact same the entire time, and that's the interest rate that gets charged on your monthly payment. And so that whatever that percentage is, that gets added on to your to the premium of your monthly payment, and that becomes the total payment that you're paying each month on your mortgage. The second main category of types of mortgages is the adjustable rate mortgage, also known as an ARM. And the reason it's called an adjustable rate mortgage is because it's adjustable. Throughout the life of the loan, the interest rate on that mortgage can actually change depending on where interest rates are falling at any point in time. So that rate could start out at like a 6%, and by the end of the loan, it could be down at like 4%. That just for example, or vice versa. See, the rate could change depending on where the where the interest rates are at that point in time. So these two categories can be broken down into several subcategories depending on what kind of life you live, or what kind of service you're in. And so the most basic kind of loan is the conventional loan. This is the one that the average buyer will get. With if you have an average credit score, if you're just pretty much middle class, buying a pretty normal sized home at a normal price range, most first time buyers will fall into this category. So that's the conventional. And then the FHA loan is a government backed loan. This is for a lower income family or an individual with a lower credit score that can't quite afford or get pre approved for a conventional loan or something bigger. So, what this is a government backed loan, and there's a little bit of strictness with these. There's a little bit more stipulations because they're government backed. So here's a few of the stipulations I mean with an FHA loan. For example, you're required to get mortgage insurance on an FHA backed loan. And what this does is it protects the lender in case the borrower were to default on payment or were to be delinquent on several payments. It would actually protect that lender because they were the one who pre approved that borrower for the loan. It protects them from getting into more trouble, and that's what the insurance is there for. But that means that that borrower has to pay that insurance on top of the loan that they already have. Another example would be that you're limited to certain homes you can buy by you're limited by the government to certain homes you can buy because um, they will have their own inspector. It's called a housing and urban development inspector or HUD inspector. Come inspect whatever home you go under contract on to make sure that it fits within the categories that that would work for that loan. And it's often can be tricky and can often result in backing out of contract because they will not support you going through with that purchase um, if it doesn't pass their inspection. Another tricky part of it is a lot of FHA loans don't allow renovations during the life of the loan, or they're very limited on how much money you can put into those renovations, and that's also tricky. And another thing is you can't really just not have credit at all, or you can't have really bad credit with an FHA loan. You still need at least a 580 credit score to get an FHA loan, which is lower than the conventional style and lower than the jumbo style loan, which I'll get to in a second. But still, that's still a credit score that you have to work up to in order to get approved for that FHA loan. You need that 580 credit score. Another type of loan that fits into those subcategories is the jumbo loan. What a jumbo loan is basically if you were purchasing a luxury style home or a very expensive home, say on the lake or in a very expensive part of the country, you would need what's called a jumbo loan because it's a more expensive home and the pre approval process is a little bit more serious because the price of that home is so large and the monthly payment will be so much more than say a conventional loan or FHA loan or something like that. So it's just a little bit bigger price range with that type of loan. Another type of loan is a VA or military loan. So if you have served in the military, if you are a veteran or you are currently in service to the military, you apply for a VA loan. And these are special mortgage programs that will give you a very much more generous rate than say a regular conventional loan or a regular FHA loan. These are much more beneficial to veterans and those who have served or in service. And the last subcategory would be a USDA loan. So it sounds like exactly what it is. When you hear a USDA, you think agriculture, and that's exactly what it is. If somebody's looking to purchase a piece of farmland or something that they can use for agricultural purposes that's been zoned for agriculture, and they're using a USDA loan to purchase it, that is a special kind of loan that applies specifically to that property and can help the borrower get a certain special program and a special interest rate on that purchase. Now, if you're wondering, how do I know which one of these I am? I don't know what my credit score is. Uh, I don't know which loan I can get approved for. I don't know if I'm conventional. I don't know if I'm jumbo. I don't know if I can still apply for a veteran loan. Um, which one am I? That is actually what the pre-approval process is for. It's for that lender to assess your debt to income ratio, your credit score, and other information about your income to assess if which loan you can qualify for based on your past service, if you're served in the military, or other things like that, or if you're a doctor or a police officer or a fireman, you can also qualify for special programs with that. And the way you find that out is through the pre approval process. So now you know the two main types of mortgages, the fixed rate and also the adjustable rate mortgage or the ARM. So now let's talk about how you can improve your credit score to get prepared for pre-approval if you're thinking about purchasing in the next 3 months, 6 months, year, 3 years. Preparation is always a good thing. You can never prepare too early. So, credit score. It's always good to take a look at and assess your debts, and your debt to income ratio is a big determiner of your credit score. And your credit score can go anywhere from between 300 to 850. That's the range it can fall in. And the way that is determined is by three different credit bureaus. And what they do is they assess your debt, they look at how well you pay off certain layaway items or certain loans, for example, student loans, and that's how they create your credit score. So those three main credit bureaus, you may have heard of a couple of them, and they are Experian, TransUnion, and Equifax. Now, if you're thinking, Tyler, I don't know what my credit score is. I've never even heard of those credit bureaus. I didn't know they existed. How do I find out what my credit score is? Well, here's something to consider. I'll share a personal story. When I realized that I needed a credit score in order to buy a home, I actually started looking and trying to figure out how I could answer this question as well. I had to Google it and find out that I need to get like the Experian app or get the Equifax app and sign up for any of these credit bureaus. Just make an account. That's all you have to do. Experian, in my opinion, has the best app to go with. Just create an account on there, and it will and enter all your bank account information. It'll ask for income information, things like that, and it'll use all of this info to determine what your credit score is. And if you're like, well, I don't really have any loans right now besides student loans, so I don't even know if it would pick up and give me a score on that. Well, that's actually the same thing that happened to me. I didn't have any loans at the time that I signed up for my account, so my credit score basically didn't exist. They didn't have anything to go off of because I had never had to put anything um, on a loan. I didn't have any credit. So that was when I actually started getting a couple of credit cards just so I could build that basis of credit. And all I had to do was maybe use these credit cards for to pay for a gas or pay for a fast food meal or something like that. Something small and that I can remember easily to pay off. And as soon as I bought something with it, I'd immediately go into my bank account app and pay down whatever I just spent on that credit card. So it was getting paid off immediately. And the quicker you make those payments on your credit card or whatever loan that you are getting, whether it be an auto loan or something like that, the quicker you make those payments and the sooner you do it, that will actually increase your score more because they'll see that you are capable of making your payments on time and even ahead of time, therefore boosting your credit score. So think of this as like the more responsible you are, the higher you score, which is pretty awesome. Yeah. When I think of scoring right now, all I can think of is college football because it begins this weekend. I'm so excited, but that's off topic. So get your credit score up. We'll worry about football on Saturdays. So now, a bunch of you may have already heard before the 20% down cliche, or that you have to put some kind of money as a down payment when you apply for your mortgage. And what that does is, let's say um, you purchase a home and the loan requires you to pay 80% of the purchase price as the monthly mortgage payment in addition to interest, but you have to put 20% of it down up front. Yeah, what I'm going to show you guys now is just how you can kind of get an estimate of what your monthly mortgage payment will be and just kind of know like the numbers, kind of a rough ballpark. Just so when you go into pre-approval, you know kind of what to expect when you do that. So what I'm going to do is screen record on another device and just show you how you can do this yourself. I mean, if you'd like me to do it for you, I'd be more than glad to. If you texted me or give me a call at 205-276-2135, I can get this to you in less than 5 minutes. It is so easy, and I'll show you how to do it real quick. First, what you're going to do is just open up any browser. So I'm going to use Chrome and then just search like bank rate mortgage calculator. And there's more than just the bank rate one, but the bank rate one is the one I've been found to be the most simple to use. So just click there, bank rate mortgage calculator. And then as you can see, it already has just a random home price that they put in there just to show you how it works. They put 425 in there, but you can put whatever number you want to in here. So let's say like let's put 250,000 home price value, down payment. If you're putting 20%, that'd be 50,000. If you're a first time buyer and you're using like that 0% down plan that I mentioned, or another 0% down plan, just put zero. So down payment would be zero. And let's say you want the loan term to be 15 years. Um, let's say today's current interest rate is probably 7.51. I think they update theirs every day to match the current interest rate. So we'll leave it at 7.5. But if you know you're going to get a special interest rate because of your VA or something like that, um, or you know you have really good credit, then you can put in your estimate for your interest rate there. So let's say you can put 6, 6. And I would put the zip code that you plan to buy in down the bottom because that can also have an effect on it. Um, and so then they'll give you the total monthly payment breakdown. They'll put just an estimate for homeowners insurance, property taxes, for that zip code you put in, etc. If you're getting an FHA loan, you can put in your private mortgage insurance there. Um, and if you know already the HOA fees of the neighborhood you plan to move into, you can put those in too. So this pretty much gives you like your total monthly payment as far as taxes and mortgage items are concerned. And it'll show you here down at the bottom just like current mortgage rates based on like your credit score. So you can put like if you have a really good credit score, you put 780 there, or if you're a little bit lower, you can put 580. I think it bottoms out at 580. But yeah, and then it'll pull up. Um, Usually it'll pull up right there below that. Um, some examples of plans you can qualify for um, if you enter all of your information. Then it'll also break down the amortization for your mortgage loan, which I think is really cool. So it'll have your loan amount, total interest paid by the time the loan matures, and then like the total cost of the loan, which is just uh, like all of your premiums plus interest added together at the end of the loan. It'll be 379,807 for this example. Uh, and the final payoff date is August 2038, unless of course you pay it ahead of time or you refinance or anything like that. That could change. But yeah, it's pretty cool, and it'll show you how much interest and principal you've paid up until now, which I think is really cool. Um, and that principal paid and interest paid. Uh, and so it'll break it down year by year for you. Uh, what your remaining balance is after each year, et cetera, et cetera. So this is a really cool tool, and I just think it can be really helpful for you to kind of see the breakdown and kind of see what you're gonna be an estimate of what you're gonna be looking at every single month. It just helps prepare you mentally and also financially for what you're going into. And again, if you'd like to sit down and kind of go over this together, because I know it can be easier when somebody's explaining it to you in person and showing you. And that's how I learn better too. So if you're like me and you need that, I'd be more than glad to help you with that. Just again, I'll put my number in the description, and it is 205-276-2135, and I'd be more than glad to help any of you with this. So a question you probably have is how much do you think I'll have to pay down up front? So that really is very dependent on the loan type, the lender you're using. So make sure to explore a few different lenders just so you can make sure that you're getting the best rate and the best deal. Because a lot of lenders, especially for first time buyers, will offer special 0% down programs, especially in the market we're facing right now, just to help borrowers and first time buyers with the tough interest rates they're facing today. That's what those special programs are for. They're there to help you, and these lenders want to help you. and that's why they're offering these 0% down programs and special things where you can get like 2-1 buy down, certain adjustable rate mortgages that will help you in the long run and up front. And if you'd like to see one of those special 0% down programs or any first time buyer programs that really would help you in your situation, I'll be happy to share any, any that I already know of and find you more that would suit you the best and help you and you or your spouse and your family in your situation. So, as a general rule of thumb, usually the higher down payment you have, the lower your interest rate will be for the life of that loan. That's just the general rule of thumb. Obviously, there's exceptions with special programs as I mentioned, but that's just the general rule. The more you pay up front, the lower your monthly payment will be for the life of that loan. So, what factors influence your mortgage affordability? So, as I mentioned before, credit score, debt to income ratio, debts you're currently paying, like student loans, credit cards, auto loans, things like that, they all affect your mortgage application and your pre approval. Just as a reminder, what the pre approval does is it helps you create a budget for yourself, and you'll know from there what kind of home price range you can look at. Just because when you have that pre approval, it'll give you the max number that you're pre approved up to. So that's like that's like the highest you can go. Then you can kind of gauge where you're looking, where area you're looking in, how big of a house you can afford, things like that. That's where the pre-approval really helps you in your home search, as well as when you submit an offer to the seller. Most listing agents will require you to also send a pre-approval letter or some sort of proof of funds so that they know that you can afford that home. And obviously, if you are very responsible in paying off your debts, you keep your credit score up there pretty high. The higher, usually, then the higher amount you'll be pre-approved up to, um, based on your income as well, and you can usually get a lower interest rate, and possibly not have to put as much as a down payment up front if should you choose to. Again, paying more of a down payment up front just makes your monthly mortgage payment for the life of that loan smaller, but you have options when you have a great debt to income ratio and a great credit score. You have a lot more options. So I hope this was very educational. I hope you gained a lot of value from this and learned a lot more about the mortgage basics and what they're basically there for. So if you found any value in this at all, if you could drop a like on the video, subscribe, and hit that notification bell, just because I'll be putting content like this out every single week, and I want you to stay informed. I want you to be educated on the housing market, so that you're prepared whenever you go out into it, and you know exactly what to look for and what to do. I want this content to benefit you and nobody else but you, and also everyone else who sees this. So share with your friends. Um, Drop a comment if you got questions or praise. Appreciate it, and I'll be happy to answer any questions and comments that you guys leave. And if you want to reach out to me directly, my number is 205-276-2135, and my email is tyler@mysrsagent.com. Again, I'd be happy to answer any questions that you have right now if you reach out to me directly, especially about the local market here in Birmingham. I'd love to get in contact with you, connect with you, see if I can help you in any situation that you're in with the housing market right now. So, thank you guys for watching again, and I hope y'all will be back here again for the next video, which will be coming out this week. So stay tuned. There's more to come, and if you haven't already, check out my first-time buyer 6-step process, and I believe it was very helpful. There's a lot of value there, so check that out if you haven't already. A lot of good stuff there too, and there will be more to come. Thank you guys.